Thank you, everyone. The first thing I'd like to do is simply thank the industry for the opportunity that you gave me to act as peer reviewer of the code. It was an interesting assignment, and I don't mean that in the sense of the proverbial Chinese curse, may you live in interesting times. It was an enjoyable experience, and I am grateful for the chance to have been involved in it. Truth is, I hadn't done anything quite like this before. I had no particular expertise in the insurance industry. I did have an interest in public policy and some experience in the regulation of other industries that perhaps was relevant. And like the rest of Christchurch, I'd lived through the earthquakes there and their aftermath and was conscious that the industry wanted a particular focus on any lessons that might be learned from those experiences. But I simply tried to approach the exercise as peer reviewer from what I guess you might call first principles, although this wasn't so much a matter of adopting any grand theoretical framework as simply trying to apply what I hoped was common sense. To me, the key question about the code was, and for that matter is still, simply, what do insurance customers or consumers have the right to expect? Now, that might be an easy question to put in that form. Obviously, the answer is not likely to be straightforward. And apart from any other reason, it's not just a matter of applying common sense. The answer to the question, what do consumers have the right to expect, isn't, I think, to be found in a single place. The code does seek to answer that question, and I think it does it very well. I think that the industry has done an excellent job in the revised Fair Insurance Code. But a point that I want to stress, it's perhaps the only significant point I'm going to make this afternoon, is that the code doesn't stand alone. It takes its place alongside, perhaps more accurately in between, laws made by Parliament, rules or rulings of regulatory bodies like the Commerce Commission, privately negotiated contracts, and indeed decisions of courts. So when the industry describes itself or is described by others as self-regulating, and the code is held up as an example of self-regulation, which I agree it is, it's worth remembering, I think, that the industry isn't just regulating itself. I'll come back shortly to why I think this point is important. First, I'd like to draw some lessons from a couple of experiences. I have worked in a couple of sectors that at different times have relied heavily on self-regulation. The first was the electricity industry. From 1996 to 2004, New Zealand's electricity industry was governed by a series of private contracts. They were called multilateral contracts because they had many signatories, but they were, from a legal standpoint, simply private contracts. 1996, when that period started, is an important date because that's the time when the New Zealand electricity sector moved away from being a monolithic, state-run, and for that matter, state-owned, single electricity supplier, NZED to those who can remember it, to a system where generators, some publicly owned, some privately owned, competed for the right to supply electricity, as they still do. Understanding why that happened for many people has simply been a matter of ideology or political philosophy. And it's true that the first wholesale electricity market of this kind began in Britain in the time of Margaret Thatcher. But for what this is worth, and I acknowledge I speak as somebody who's sympathetic to such markets, I don't think the key driver here was philosophical, either in Britain or in New Zealand, so much as technological. Electricity markets took off here and around the world as soon as computers became fast enough and cheap enough to allow electricity to be traded in real time, to allow in real time an auction to determine who had the right to supply electricity. It's perhaps not unlike the technological change to which reference has already been made today that's facilitating consumer-led changes in a number of markets, rental accommodation and the taxi sector. Intriguingly, I think, the first step that was needed, certainly in New Zealand, before generators could compete to supply, was the ability to determine rules that helped determine how much electricity was being produced and sold. The industry needed a way of measuring before it could begin to price. So the first New Zealand industry agreement was called MAREA. It was the Metering and Reconciliation Industry Agreement. Some WAG ensured that a subsequent agreement was called MAX, which stood for the Multilateral Agreement on Common Quality Services. Basically, it was the regulation of voltage and frequency on the grid. A number of people then tried to work out how to get MAX into bed with MAREA, so to speak. Eventually, self-regulation was replaced by public governance, ruled by public authorities such as the Electricity Authority and the Commerce Commission. The intriguing question, I think, on reflection, is not why did that happen? Public regulation is the standard approach to these markets internationally. But how had it been possible for the New Zealand electricity industry to govern itself even for 8 years? And I think the answers are partly a matter of the scale of this country. It was relatively easy to assemble the players for them to meet and conduct themselves, but partly also the willingness of industry participants to work together. Self-regulation, I believe, is possible in this country where sometimes you don't see it elsewhere because we're small enough to be able to work together easily, but also because there is, and sometimes we ignore this, we don't stand back and observe it, there's a culture of easy cooperation. And I think those factors are just as true of the insurance industry as of the electricity sector. More recently, I've been working in the rural sector around the regulation of water. I deal every day with farmers and irrigation companies who act for landowners who hold consents or permits, as they're sometimes called, to abstract water, either from underground or from streams or rivers. Also, it's common these days, at least in Canterbury, for farmers to need permits to discharge nutrients. So I'm talking about things like nitrate, nitrogen, or phosphorus into their soil, as cattle in particular do their thing, and as effluent is used as fertiliser. Environment Canterbury has rules which allow farmers to join together to aggregate their consents, to add them together so that a single consent takes the place of the previous individual consents. And instead of having to comply with that individual take or discharge consent, an irrigation scheme or a water catchment group, as it might be, accepts responsibility for complying with a total limit that applies to the group as a whole. This gives the group's members more flexibility, also gives the council fewer data points to monitor. When it was first proposed, this system was described typically as audited self-management, the bit of jargon, if you like, that the industry used to describe what they were talking about. It is, I think, another form of industry or sector self-regulation. But, to repeat the point earlier, it doesn't sit on its own. It sits in a context of council regulation and indeed statute, notably the Resource Management Act. The main thing I can tell you from my experience in these two areas is that industry self-regulation faces a high degree of public scepticism. Whatever the advantages, for example, the flexibility, the public's concern centres on issues of trust. Can these sectors, can these industries be trusted to look after themselves responsibly? If you think about it, I think it's no coincidence that the phrase looking after themselves has two quite different meanings. Think about it. The first point that might be made, perhaps in response to that public unease, is that self-regulation certainly does not amount to no regulation. The electricity sector, for example, produced pages of rules, the multilateral contracts I talked about, were big documents. Reflecting the challenge of managing a national system where supply needs to balance demand second by second, and where investments were very large, in the hundreds of millions of dollars and long-lived. For that matter, the monetary penalties that the industry managed to impose on themselves voluntarily or based on the contractual agreement were real, frequently in the hundreds of thousands of dollars at the time. In the farmer's case, the need to farm within environmental limits is now widely accepted. Rural interest groups have negotiated agreed good management practices. They've defined what well-behaved farmers should be expected to do in terms of land management or effluent management or irrigation practices. Those narrative descriptions of good management are now being converted into actual nutrient limits. Kilograms of nitrate per hectare per year, of the kind that can then be calculated and enforced. But important though those rules are, not least for the confidence that they hopefully will give the wider population, the really important thing is the effort in terms of farm management and changed farm practices that will result from the adoption of such limits. It's the things that have to happen on each farm that aren't easily encompassed in regulation because they're too manifold, they're too different in one farm from another. And so we've got this division of responsibility, if you like, between the limit, the rule, which needs to be capable of being enforced and in the ultimate will be enforced, and the practices, which are in the end much more important, that will need to be employed to achieve those limits. Self-regulation, the latter, coupled with regulation, the rules, go together, I think, very well, but it's important for the public to see those two elements and to see that they are both important and both real. In short, I see all three sectors, electricity, agriculture, and in the insurance sector, working in an environment where some rules are made by Parliament, some by regulatory authorities, some are left to individual contracts or agreements, and some reflect industry cooperation and agreement. I haven't, so far, I'm conscious, said very much about the insurance code itself, and frankly, I'm not going to. I think it speaks very well for itself. But I do want to make this point. I think that one of the best things about it is that it is its accessibility. It is an easy document, I believe, to read. And the point I want to make about that, apart from commending the industry for that, is that it isn't an accident. The industry clearly set out to produce something which was clear as well as reasonable and hopefully simple in the sense of accessible. I think the code commendably largely avoids legal language and, for that matter, industry jargon. The kind of multi-layered provisos and qualifications that have people wondering whether the core commitment still has substance are absent. But in case you think that is an easy thing to achieve, let me assure you that it is not. Many, many years ago now, as a young lawyer, I set myself the goal of writing wills and contracts that my clients could take away and read for themselves and understand. Writing in plain English is much, much easier to aspire to than to achieve. One reason we're not all journalists is because writing in clear, telling prose is not a natural or an easy skill to acquire. There's another phrase or label that, at least in New Zealand, has sometimes got in the way of a proper appreciation of the place of industry self-regulation. I think it too has helped undermine, to an extent, public confidence in self-regulation as an appropriate approach. And that's the label light-handed regulation. It's perhaps not a term in quite as much currency these days as a few years ago. Nevertheless, I want to address it. It's a term that gained currency, in particular in the 1980s, as a contrast to the pervasive and severe controls that were common up to that time. I think it's worth remembering that, you know, if we want severe regulation, then we don't have to go far except back into our own history. There was a time when banks, for example, required their own acts of Parliament because the Companies Act said straightforwardly it was unlawful, it was a breach of the Companies Act for a limited liability company to operate as a bank. The only way around that prohibition, until eventually it was removed from the Companies Act, was for each bank to be authorised by Act of Parliament, as it was in New Zealand. At the same time, simple transactions like hire purchase were heavily regulated by the government. The amount of deposits and the lengths of the terms that the contract could cover were both limited. For years, interest rates were set directly by politicians. I remember when both first and second mortgage rates were set by the Minister of Finance. And unsurprisingly, the easiest place you could go to for mortgage finance was to a law firm. Even as a lawyer, I've got to tell you, that did not make a lot of sense. That the insurance sector in this country, at least, escaped the worst of those interventions at that time is explained, at least in part, by an interesting fact, interesting in the sense that it wouldn't necessarily be the case in other places, that the single largest general insurer in this country was for many years owned by the government. State insurance, hence its name. Which I hope reminds us that ownership and the decisions made by individual owners can themselves be another form of, if not industry self-regulation, self-regulation in a business sense. Also, of course, a form of competition. And indeed, a powerful way of influencing industry behaviour and public perceptions. Self-regulation is, when we use that phrase, I think we're thinking about decisions made particularly at an industry level. But that doesn't mean, it certainly shouldn't imply, that equally important decisions aren't still being taken by individual firms. So to conclude on light-handed regulation, in my view, this was never so much a reduction of government intervention as I thought a useful presumption as to the sensible place to start. One minister in the 90s rather than the 80s said, used the rubric when asked what he was looking for as little regulation as possible, but as much as necessary. You can tell that comes from a politician, but at least it sets out a goal. It may not be terribly useful at the level of substance, but it set out a philosophy with which I would concur. So let me conclude by switching topics quite dramatically to address briefly some lessons from the Christchurch earthquakes. As I said, one element that the insurance industry considered as it revised the code were any lessons that might be gleaned from those events. If nothing else, they surely reminded us that we can't assume benign, normal operating conditions. I'd offer, I think there are 8 lessons. Firstly, and pretty obviously, extreme events do happen. The risks we insure against on the basis that while they're unlikely, if they were to occur, they would be very disruptive, aren't hypothetical. They may not happen often, but they can and do occur. Secondly, it's easy to forget that the Christchurch earthquakes did less financial damage precisely because of the high levels of prior insurance. That's not something that this industry or this audience is likely to forget, but sometimes down home, I think that lesson is lost a little. The scale of the disaster, on the other hand, was overwhelming. That's not, everybody understands that. I think some would still debate the extent to which the sector was unprepared. And to me, what's even more important is that in response to the fact that the sector was probably unprepared, some elements in it became defensive. And I think that is where a lot of damage was done. And from that reaction, I think it is the case that to a considerable extent the sector has yet to recover the public's trust. I also think the sector was unprepared at a technical as well as a physical level. One obvious example, there were a number of legal issues which turned out to need to be resolved. Liability for multiple claims in relation to successive aftershocks being a good example. Efforts were made to resolve those matters by agreement. In the end, that wasn't possible and it needed to be resolved in court. That is what the courts are there for, but it imposed delay and it created the impression that either something was wrong, there wasn't an easy path to the right answer, but also perhaps that there might have been an alternative way of resolving this matter. It looked like a failure of process. I also think the sector was unprepared for the scale of physical work that would be required. Perhaps it's not reasonable to expect it could have been prepared. But again, the way in which that failure was then described, owned up to and addressed could, I think, have been better. And that's a lesson we need to learn for the future. While most of the residential work in Christchurch has now been addressed, what remains continued to cast a shadow over the recovery. People might not appreciate this, but perversely, those whose homes have been rebuilt or replaced often even now can't quite enjoy that recovery while their friends and neighbours are still waiting. Thinking about this, I think the right way to think about this is lots of people remarked, more especially in the immediate aftermath of the earthquake, the way in which Christchurch drew together and shared this collective experience. There was an extraordinary coming together. Well, that's still creating its own tale. Those who respond to continuing complaints by making a perfectly fair and indeed obvious point that we're now dealing with a quite small minority of outstanding claims are making a point which is literally correct and I'm afraid relatively unpersuasive in the face of that collective experience. To the extent that people, even people that don't know, unfortunately there are plenty of people I do know who are still waiting, I feel still an empathy with them that my own recovery doesn't outweigh or doesn't alleviate. And I'm bound to say, I don't want to over-stress this point, but I am left with the impression that debatable judgments are still being made. In particular, the approach being adopted by some to cash settlements at least needs more explanation publicly than it's receiving. It looks very much as though problems are being passed on to future generations. Put another way, I don't think it's quite enough to reach an acceptable bargain as between insurer and insured. That's the first thing that needs to happen, contractually and in other ways. But if that bargain doesn't sit easily in a wider community context, then don't be surprised if there's some public spin-off in terms of unease or indeed even distrust. On the other hand, I think one lesson from the earthquakes is a positive one in the sense that it is helping us to identify where new insurance products may be necessary or at least where there may be an appetite for them. for what it's worth, and I know there was some discussion about this morning, I too would question the reliance being placed on nominated cover. It feels a little like a transfer of risk to the insurance customer. Now, the market sympathetic economist in me says, well, if there's full disclosure of the nature of those risks, where's the harm? The conclusion that perhaps hasn't been identified so often is maybe there is an additional market being opened up by nominated cover, whereby at a higher price, no doubt, you buy peace of mind in a traditional replacement cover sense. Maybe there's a market for both products. Maybe they would sit quite well together, and maybe reinsurance needs don't yet allow for both to be present, but I think there's some issues there to think about. Another lesson possibly, or another potential product, the lesson is the extent to which in a big disaster, homeowners will want to undertake additional work. When your house has virtually been destroyed and it needs to be either replaced or, see, in replacement it doesn't quite work because you get exactly what you want then, but if you're substantially rebuilding an existing house, it is inevitable, I think, and I speak from direct experience here, that one partner is likely to say, darling, I guess I get that new kitchen I wanted for a while. So yes, my lovely wife got a new kitchen, which we paid for because we were certainly enlarging what had been there previously. We weren't interested in going through the experience of getting back exactly what we'd had and then trying to significantly modify it 2 or 3 or 5 years later. Now seemed like the perfect opportunity to enlarge the sunroom or do whatever else we had dreamed about doing, even though that would be at our expense. So when I see some companies saying, okay, hang on a moment, this is getting out of hand here, I'm going to set a limit on the amount of extra work that can be available, can be undertaken at the same time. I get that. That's a perfectly understandable response. But again, maybe it says something about the nature of the cover, the nature of the product for which there will be an appetite if people are going forward drawing lessons from these big events. Lastly, but above all, I would say, please, please stay in touch with your customers. The worst aspect of the 5 years has been the long silences. The periods of months at a time where you could get no sensible answer at all. I'm not going to name names or take that any further, but the commitment in the code, it's in paragraph 38, to staying in touch with your customers, I think is the right response. It's not an accident that is there. And indeed, it's not an accident that the code doesn't say very much, doesn't go on for pages and pages about how one might respond to big events, but concentrates fundamentally on just that principle. Whatever happens, whatever we're dealing with, whatever the products we've offered or the consequences we're now having to deal with, we commit to staying in touch with our customers. That's I think, absolutely the right place to have landed. It's there because I'm afraid it's a lesson that the industry has learned. Thank you very much for the opportunity to work with you and to share those thoughts.